You are listening to Charting Wealth's consolidated review and forecast for the week beginning Tuesday, the 27th of December, the last trading week of the year. I've been a little bit under the weather and sorry we did not get this out to you earlier, but hey, we got it out well before the markets opened on the shortened holiday trading week. Let's go through now. Remember, we're going to cover our weekly, our 2-day, and our 2-hour charts on all 4 of the ETFs that we review. That is the S&P 500, the NASDAQ 100, the 20-year bond, and gold. Then we're going to take a look at the news that moved the market this last week and what might be moving it this week. Well, let's jump right in as to where markets are on the S&P 500. And again, you'll hear me trying to draw breath here. I have had a lung issue. That's one reason it makes it difficult to do a podcast when you can't breathe. But let's talk about where we are. Market crossed over going up on the weekly chart back on the week ending the 25th of November. That was on the S&P 500. We had already seen the charts cross over earlier on the 2-hour chart and then the 2-day chart. Then we saw a recrossing, and we've got movement above the weekly chart. We have crossed below our 2-day chart, and we'll get into that as we move into what the 2-day chart looks like. But for this moment, let's look at just the weekly. We see on the weekly, the derivative oscillator continues to build energy. The weekly chart continues to move up. The last week was a red open box week. It was really more of a sideways slide. And as we jump into the 2-day chart, we'll be able to see that a little more as the market really hit its high of highs all the way back on the 14th, Wednesday, the 14th of December, and then slid sideways since that point, all the way through the 16th, the 2-day chart ending, then the 20th, the 22nd, and then the first day of the 2-day chart ending on Friday, the 23rd. We do see that the derivative oscillator's been losing energy since it topped out on the 12th, and we see that the PPO, the price percent oscillator, has slowly been itself moving sideways and then over. So we may be getting ready for a crossover going down. Technically, the market was up on Friday 0.15%, but we've really just been losing ground as we look into it and really figure out just what's going on. If we look on the 2-hour chart and delve even more into the weeds, into the intraday movement, what we can see is we had a cross through our what had been upward movement on the 2-hour chart back on the 19th, and then we had a little bit of just seesawing back and forth as that market moved sideways. Actually, the 2-hour chart crossed over going down back on the 14th and has never moved back up since then. So not enough energy to pull our price percent oscillator over going back up. We've seen the derivative oscillator move over, but that's not our big indicator. So what we've basically seen is the market lose that energy here toward the end of the year. Now, will it make it up Tuesday through Friday of this next week? Well, we'll just have to wait and see, won't we? But what we're seeing right now is inherent weakness, even though we are still in a confirmed uptrend on the weekly chart still, and that weekly chart is strong. The 2-hour chart has lost a lot of energy, and we do have a red candle, so we've not moved through that 2-hour trend or the weekly trend line yet, but we may see that. So again, we see just some weakness on the horizon. Do those of you who are using your daily charting review summary, please make sure that your daily market worksheet, please make sure that you fill that out, that we're in an up move on the S&P 500 still on the weekly. So that's what this is the only time that pretty much supposed to be the only time that we actually look at the weekly chart, although I've found ourselves looking at it more and more on the daily broadcasts. Now let's jump into the Qs, QQQ, which is of course the NASDAQ 100. It is not yet, it's tried and tried to cross over going up, has not yet made it on the PPO. The derivative oscillator did cross over going up. We've had 3 weeks of up movement, but again, not enough energy to push over and bring the PPO, the price percent oscillator, in an upward movement. So again, we don't have a trend line because we don't have a crossover, so we've not confirmed it yet. And we have had a crossover on the 2-day chart moving up, but not on the weekly, so we've not called that yet for the Qs. Now, if we delve into the 2-day chart, what do we see? Well, even it has topped out, and the last two 2-day candles have broken through the 2-day trend line. So again, we are appears to be topping out here at the end of the year. Not a lot of strong upward movement. Again, it was a pre-holiday week, and we, see folks leaving in the market really not having all sorts of volume and not being pushed up strongly. What do we see on the 2-hour chart on the NASDAQ 100? Well, we see that it actually crossed over going down all the way back on the morning of the afternoon of Thursday, the 15th, excuse me, of December, and slid sideways pretty strongly through the 19th, recovered a little bit, and has really just been sliding sideways since then. So where are we on the NASDAQ 100? We don't have a crossover going up yet on the weekly. We've broken through the 2-day trend line, so we see some considerable weakness there in the Qs also. So from the weekly chart on the Qs, we're now going to jump into the newest chart that we've started reviewing. That is TLT. That's the 20-year Treasury Bond Fund. What do we see going on there? Well, it's very interesting. When we look at the weekly chart, we see that it crossed over going down all the way back on the 19th of August. That was the Friday ending that week, and it moved down pretty considerably since then, but we've seen some hope on the horizon. We've actually had a reversal when we jump. Now, the weekly is still confirmed moving down. However, it's losing downward energy. We can see that the PPO is not moving down as strongly as it was, and the derivative oscillators lost its downward momentum. If we look on the 2-day chart, we can see that the 2-day chart actually crossed over going up back on the 22nd, and it's now in an upward movement. Derivative oscillators also switched over, and we've drawn that. We've also drawn an upward arrow, so that we're noting that it is a different move than the confirmed down move on the 2-day chart back on the 5th of October. So we do have a change. The weekly's not changed yet, but the 2-day has. And of course, when we look at the 2-hour, we can see that it, around the same time, crossed back over going up again. The 2-hour's been a little bit of everywhere as the bond has settled out and bottomed, the 20-year bond market, and started moving up, at least on the 2-day and on the 2-hour. So keep that in mind. We may see bonds recovering. We're going to watch. It's just the 2-day. It's not the weekly yet, but the weekly is also slowing its downward momentum. So we'll pay very much attention to bonds. So go ahead and continue to mark the weekly down on your daily market worksheet, but the 2-day now is up, and we'll see just what that holds for us. Again, those of you who love bonds and want to try to ride some upward bond movement, you can look to do that in the very near future. So let's just continue to watch that. Now, lastly, and thank you for bearing with me. It is a little hard to breathe if you can hear me, but I'm getting better. We're going to go to gold. What's going on with gold? Well, gold's in a confirmed down move after it crossed over going down back on the 12th of August, and continues to move down. In fact, the huge down movements on gold started on the week ending the 11th of November. We then had a 2-day crossover going down. Would have been a great point for you to have gotten into gold, because it really has shuttered down since then. We're below the 2-day trend line on gold. I'm sorry, the weekly trend line on gold. Derivative oscillators continuing to gain energy, as is the price percent oscillator. If we look at the 2-day chart, what do we see in gold? Well, we're continuing to move along down below that. It does look like the price percent oscillator is flattening out and sliding sideways, and very slightly the derivative oscillator is stopping. It's not moving down as strongly as it had been on the derivative oscillator as far as the 2-day chart goes. So we'll continue to see. We may be seeing gold bottom out. Again, it's been hovering right around that 107 mark. Don't really have, I mean, when we were looking at where gold had stopped before, it was all the way down at 100. I even heard people calling it down to 90. So we're not seeing that. We're seeing it stop right around 107. So let's just, I mean, it's not stopped yet, but it does seem to be holding there. So let's see if we have a crossover on that 2-day chart and if gold's going to make a recovery. We're not really seeing much of anything on our 4-hour or our 2-hour chart as gold has just slid sideways on us. It did this at the end of 2015, and the 4-hour chart, which has been such a great chart for us, did not start working again until January, well, end of January, beginning of February of 2016. So maybe that'll happen again. We'll continue to monitor that and work on it. Again, those of you with your daily market worksheets, gold is confirmed down on the weekly and on the 2-day chart. That is where we are on our charts as we ended that week right before Christmas and as we start the last trading week of the year for 2016. Let's talk about the news. Not a whole lot in the news, although I will update you on a few things. The already strong U.S. gross domestic product figures were revised even higher. They got the final reading on the third quarter. It came in. It's originally reported around 3.3, and now they're saying the economy grew 3.5%. And we also saw in the United Kingdom, their Q3 growth was revised higher. And a quarter-over-quarter basis, their economy expanded 0.6%. for the 3 months following the Brexit vote. Remember, the UK was just going to fall apart? Well, that did not happen. What's happening in Scotland, where they're threatening to bolt the UK after they voted to stay in back in 2014. They want to still be a member of the EU. Remember, debtor countries like being in the EU. Countries that aren't debtor countries don't like to turn around and, I guess, consign their currency. Although the UK was not foolish enough to do that, it'll make the Brexit vote easier. But consign their economies over to be run by the bureaucrats of Brussels and the European Central Bank. Nobody wants that, and it does appear that peoples throughout the European Union are starting to feel that way. We'll just see how far that goes. Some good news from the Bank of Japan. Upgrades its economic outlook. It's about time for those who follow what goes on in Japan. Hard going for many, many, many years. And also, a little bit of good news. Deutsche Bank and Credit Suisse have decided to settle their scamming of the, as it's put here, mis-selling of mortgage-backed securities dating all the way back to the global financial crisis. Looks like the folks at Credit Suisse are going to be paying $5.3 billion and Deutsche Bank $7.2 billion. So we'll, be glad to have that money back. I wonder where it's going to go. If any of you read up on that, let me know. I'm sure it's going to the government. We'll see what happens to all the people that ended up getting screwed on the back end. I won't be holding my breath waiting for a check. Now, let's talk about what's going on this week. Not a whole lot. The Japanese, who aren't a nation that celebrates Christmas, I mean, I know they do like the holiday over there, but not a Christian nation. They are, of course, releasing a bunch of economic reports where that's not happening. In places like the U.S., we see that Japan is going to release its consumer price index and unemployment figures on Monday, the 26th. And that is, of course, a day that everything is closed in the U.S. They're also going to report retail sales data on Wednesday, the 28th. And then on Wednesday, the 28th, also, the U.S. is going to release its November pending home sales. And that is where we are in this shortened trading week, with the New Year celebrations going to be happening here at the end of the week. I hope that you are continuing to watch this market. If you don't already have yourself, you did not receive a copy of the Stock Traders Almanac 2017, man, you need it. And need to pay attention to see if this Santa Claus rally rings true. And also look historically in your almanac as to what goes on In January, typically we see a pullback in the market in January and February. So be ready to potentially make some good moves in inverse ETFs if indeed we see that. We're already seeing some weakening as we talked about. So we really appreciate you being with us. You have questions, problems, concerns, let us hear from you at Charting Wealth. Just go to the Charting Wealth website, chartingwealth.com. Not already signed up for our newsletter, do so. What do you get with that? You get all sorts of goodies. You get the daily market worksheet if you want to supercharge your training. If you're really serious about learning how to read a stock chart, and you ought to be, if you care anything about your wealth in the future, being able to know what's going on in the market, you're not going to get it from the talking heads in the media. You're going to get it from being able to read these charts. When you practice 10 minutes a day with us, that's all we ask, you will eventually, I'm not saying how long it will take some time and energy, but you will eventually be able to read these charts. And when you can do that, my friend, the world is your oyster. So what do you need to do? Sign up for our newsletter at chartingwealth.com. We will send you our daily podcast and our weekly comprehensive review. Then you need to print out multiple copies of the daily market worksheet. It's a PDF. We want you to fill that in by hand. There's something magical about writing down what you're hearing, following the charts as you listen to the 10-minute daily broadcast, making sure that you follow along with us, and practice trade. We're not a stock calling service. We don't give investment advice. We're an education firm. We want you to practice. Once you get good at this, you can make up your own decision, make up your own mind, spend your own money on tiddlywinks or investing in the market or doing whatever you want to do with it. But in the meantime, we want you to practice with us until you get good. Then you can use your own money as you see fit. And I'm telling you, the most important 10 minutes a day that you spend regarding your financial future is with us. Thank you so much. If you appreciate what we do, we ask you to do two things for us. Go subscribe to our podcast and at iTunes and give us a 5-star rating. You guys have made us a size number 6 on Stock Market Podcast worldwide, and we so appreciate that. We also ask that you go to YouTube and subscribe to our channel. Only two things we ask is a little recompense back to us. God bless you. Hope that you had a fabulous Christmas, Hanukkah holidays. Hanukkah's still going on. And we wish you a great and prosperous new year that's on the way. Thank you so much, my friends. Take care. God bless from chartingwealth.com.